Cardano investors are the whales onto something big. A staggering 80 million ADA tokens have been scooped up in just 48 hours. But here's the question, will this massive bet on Cardano push its price to reclaim the $1.20 level, or is a market correction inevitable? Stick with us as we break down what this means for ADA's future, the key metric signaling danger, and the next move for the bulls and bears. Welcome back to Zaki Crypto Update. If you're new here, we deliver timely updates and in-depth analysis of the crypto market to keep you ahead of the curve. If you're an ADA holder or just intrigued by the movements in the Cardano ecosystem, this video is for you. Hit that like button and subscribe for more insights that will keep you informed about the fast-paced world of cryptocurrency. Today, we'll uncover the driving forces behind Cardano's latest price swings, the role of whales in the current market, and what the charts suggest about ADA's next move. Will ADA bounce back to $1.20 or dip further below the $1 mark? We'll look at whale movements, market indicators like the NIMF ratio, price divergence, and trading volume, and close with our forecast for ADA. Stick around because every detail matters. Cardano, once hailed as the Ethereum killer, has been under the spotlight recently, but for reasons that aren't all positive. Since hitting a high of $1.327, ADA has struggled to maintain upward momentum. As of now, it has dropped to as low as $0.911. This sharp decline is a stark reminder of how volatile the crypto market can be. While many traders may view this as a setback, there are those who see opportunity. And this is where the whales come into play. Whales entities or individuals holding vast amounts of a particular cryptocurrency have decided to buy the dip. According to renowned crypto analyst Ali Martinez, over 80 million ADA tokens were purchased in just the past 2 days. That's an astonishing display of confidence from major players in the market. Now let's address the big question, why are whales suddenly accumulating ADA? Historically, whales are often seen as the smart money in the market. They usually act based on strong conviction or insider knowledge about the asset's long-term potential. In this case, Cardano whales likely believe that the current dip offers an undervalued entry point. Despite the bearish trend dominating the charts, whales may be anticipating a market reversal fueled by ADA's strong fundamentals. Cardano has a robust ecosystem, continuous network upgrades, and a vibrant developer community, all of which could drive long-term growth. Looking at the price action over the past 2 days, ADA initially rallied from $0.93 to $1.182 following the whale accumulation. This spike seemed promising, hinting at bullish momentum. However, the rally was short-lived, and ADA pulled back to $1.09 at the time of writing. This 6.42% decline on daily charts and an 8.51% drop on weekly charts underscores the bearish pressure that continues to weigh down on Cardano. So what's causing this bearish sentiment despite the whale activity? The answer lies in the broader market indicators and technical analysis. Firstly, the long-short ratio reveals that 52.1% of traders are taking short positions on ADA. This clearly indicates that most investors are betting on a further price drop. Shorting, as you know, involves borrowing an asset to sell it at the current price, hoping to buy it back at a lower price. When short positions dominate, it reflects a lack of confidence in a bullish breakout. Secondly, it does price DAA. Divergence has turned negative and has remained so over the past week. For those unfamiliar, the price divergence compares an asset's price movements to its daily active addresses. When the divergence is negative for an extended period, it suggests that the price rally is outpacing network activity, often a sign of speculative buying rather than strong fundamentals. Lastly, the NIMF ratio, which compares market capitalization to transaction volume, has risen sharply from 10.85 to 70.94. A rising VET ratio typically indicates that the market cap or price is growing faster than transaction volume. In simpler terms, this means that ADA may be overvalued at its current levels as the network activity doesn't justify its price. With these bearish signals in mind, it's crucial to consider what lies ahead for ADA. If the current sentiment persists, ADA could drop further to retest the $0.93 support level. However, this isn't necessarily the end of the road. If buyers, particularly whales, continue to accumulate and new investors step in, ADA could regain bullish momentum. The next target would be reclaiming the critical $1.20 resistance level. This level is significant because it represents a psychological barrier for traders and is closely watched by both bulls and bears. Breaking past $1.20 could pave the way for ADA to test higher levels, potentially reigniting confidence in its upward trajectory. Let's not forget that Cardano's long-term success is tied to its fundamentals. The network is undergoing continuous development, with recent upgrades like Hydra aiming to enhance scalability. Moreover, Cardano's focus on sustainability, interoperability, and decentralized governance makes it a strong contender in the blockchain space. While short-term price movements are influenced by market sentiment, long-term investors often look at the bigger picture. For ADA, the combination of whale accumulation and strong fundamentals could act as a catalyst for future growth. It's essential to highlight the risks involved. While whales are buying ADA, their actions alone cannot dictate the market's direction. If bearish sentiments continue to dominate, even large-scale accumulation may not be enough to reverse the trend. Additionally, the overvaluation signals indicated by the NENF ratio and price divergence suggest that the recent rally may have been unsustainable. Investors should be cautious and avoid making decisions based solely on whale activity. Always consider the broader market context and your own risk tolerance before making any moves. Before we move on to ADA price predictions and key takeaways, don't forget to like this video and subscribe to Zaki Crypto Update for more in-depth crypto analysis. Your support helps us bring you the latest insights and trends in the crypto world. Now, let's talk about potential price scenarios for ADA. If the $0.93 support level holds and buying pressure increases, ADA could target $1.20 in the short term. A break above $1.20 would open the door for ADA to test $1.50 and beyond, depending on market conditions. On the flip side, if bearish pressure intensifies and ADA fails to hold the $0.93 support, the next stop could be around $0.85 or lower. This would represent a significant loss from current levels and might shake investor confidence further. To wrap up, Cardano is at a crossroads. The recent whale accumulation of 80 million ADA tokens signals optimism from large holders, but bearish indicators like the NENF ratio and price divergence cannot be ignored. Whether ADA will reclaim $1.20 or face further declines will depend on a combination of market sentiment, technical factors, and broader crypto trends. As always, we recommend staying informed and cautious. Don't base your decisions solely on hype or fear. Do your research and assess the risks. If you found this analysis helpful, hit the like button and subscribe to Zaki Crypto Update. Let us know in the comments, do you think ADA can reclaim $1.20, or is the market correction just getting started? Thank you for watching, and make sure to check out our other videos for more insights into the world of crypto. Until next time, stay informed, stay safe, and happy investing.